We will just give our students another minute or so to join in, and then we'll get started.
Okay, it looks like we have a good group. I think we'll kick it off just to keep to time. Welcome, everyone. My name is Helena Zenwa, and I'm the Assistant Dean for Stewart School of Business, Career Management Center, and External Relations. Today, we will be hearing from our speaker regarding careers and investment management. We have our audio and visual recording notice on display. Please take some time to review that as the session will be recorded. If you would prefer not to have your image or voice recorded, please feel free to keep your camera off and to keep yourself on mute. Throughout the session, you have the opportunity to use the chat box to submit your questions. Please do that, and Shazad and I will share those questions with the speaker to make sure that we get those answered. That being said, I'm going to transition over to our Senior Associate Director, Mr. Shazad Hussain, to introduce our speaker.
Thank you, Helen. I would like to take this opportunity to welcome all the participants and also thank Dr. Ramesh Poola for his valuable time. Dr. Poola, thank you so much for agreeing to speak to our students. Dr. Ramesh Poola is the Chief Investment Officer, Fiduciary Services at Creative Planning LLC. Prior to joining Creative Planning, Dr. Poola was the co-CIO of Iron's Fiduciary Services. Dr. Poola joined Iron Financial in 2009, and he led investment research, technology, and operations for Iron's investment fiduciary corporate retirement services. He also headed and oversaw all quantitative investment research, financial modeling, portfolio construction, and risk analysis for Iron's investment strategies across all asset classes. Before joining Iron, Dr. Poola was an equities research analyst at Koch Quantitative Trading LLC, a division of Koch Industries, where he was responsible for quantitative research, development of new investment strategies, and for the development and enhancement of advanced risk management practices. Previously, Dr. Poola was an equity research analyst at Morningstar LLC, where he was responsible for fundamental equity research coverage in the diversified industrial sector. He conceived and organized Morningstar's first stock conference, The Management Behind the Moat. Previously, Dr. Poola spent 6 years in advanced engineering research and development at General Motors Corporation and 6 years as a leading researcher at Argonne National Lab. Dr. Poola was awarded 11 US patents and co-authored over 60 scholarly technical papers in leading peer-reviewed journals. He was also a recipient of GM's Outstanding Achievement Award for exemplary leadership and excellence. He was a three-time recipient of the Argonne Directors Award, the highest award provided by Argonne for outstanding achievements and research contributions. He was also a recipient of the R&D 100 Award from R&D Magazine. Dr. Poola received his MBA with honors in analytical finance and accounting from the University of Chicago Booth School of Business. He also holds a PhD in mechanical engineering from the Indian Institute of Technology, Madras, India. Dr. Poola is a CFA charter holder. Above all, Dr. Poola has been a staunch supporter of our efforts at Stewart School of Business. And we thank you, Dr. Poola, once again and welcome you for this presentation.
Thank you, Shahjad, for your kind introduction. And I'm a big believer in sharing the information, sharing the knowledge to the future generations, particularly for undergrad, graduate students who are really trying to make into the investment management careers. And I would like to share some of my own experiences to the students, and also be happy to answer some of the questions they might have along the way. And I'm going to start with my presentation. So can you see my slides here at this point?
Not yet.
Okay. So just 1 second. Yes, share. All right. Can you see now?
Yes.
Good, very good. I want to cover actually 3 topics today. One is basically talk about different careers within the investment management realm. And then I also wanted to share some of the trends currently being, we can see in the industry, at least latest developments and trends, if you will. And I want to share that. And then third, I also wanted to give you more tips on looking for a job. How do you really position yourself if you find an opportunity? So it's more counseling and interview related questions, and how do you prepare for the job market, so to speak. And I know there was a typo in sending the invite. It says actually careers in investment banking. Unfortunately, we corrected early on, somehow did not probably come across. My apologies if that was not reflected beforehand. So if you're really looking for careers in investment banking, this is not probably the right time for you. But if you're still interested in the investment management, hang on here, and I'm going to share you some more information. So I just want to give you some broad overview of the investment management industry. Many times when we are a undergrad or grad student, and when we take some investment classes or quant classes, we think that actually the world is much narrower, looking for maybe an equity analyst role or maybe quantitative analyst role. But I wanted to really broaden that view to show you there are many different aspects within the industry where there is an opportunity for many of you. And if you look at the industry, it is broadly classified into asset management, wealth management, risk management, investment operations, and then the legal compliance and regulation. These are the 5 major departments, or maybe different spaces, if you will. And each one really required different talent, and is also, each space is divided into several subcategories. So it is so important for all of you to identify what are you really aspiring to be, and what is really interesting to you to work on these different areas. So let us start with the asset management. So this is basically where actual investment decisions are being made to buy and sell securities. So that means you are doing a security research. It could be investment research, or you could be doing research on the portfolio, or maybe you're part of a trading where you're really executing the decisions made by the PM, or you might be really developing the business for finding opportunities to sell a strategy, maybe essentially bringing clients to invest money, or simply consulting. So in the institutional space, you're really advising somebody how to manage their portfolio. So you're becoming actually consultant to an endowment or institution how to manage money. Within the investment research, there are sell side, buy side, outsourced CIO. And let me explain why there are 3 distinct functions within the investment research. The sell side is essentially a company is coming to investment bank, and they're really willing to issue equity to the investors. Then the investment banking is essentially trying to market that opportunity to the investors. So it could be simply a stock issuing or maybe a bond issuance. But your role is going to be basically understand the company fundamentals, do thorough research on the industry, company, all the analysis, and giving a nice picture about, in a very positive way, why there's a good opportunity for investors. So that means you as an analyst is essentially being the intermediary to really broadcast that information in a more professional way so that the prospective investors can read your report, understand in and outs of the company, and invest. So that is all sell side. So essentially, you're selling that research to the prospective clients. This is mostly these jobs are in the investment banking realm. And then when you come to buy side, here you're really managing money for the client. So the clients are coming to you to manage their money. Now you're sitting in a, for example, JP Morgan Chase or maybe Fidelity or T. Rowe Price, and there will be an equity strategy. And here you're going to be an equity analyst. So you're doing research on the equities and recommending your recommendations to the portfolio manager, and the PM is making a decision to buy those securities for the clients, right? So you're actually managing the money. So the buy side research is all essentially you'll be very investigative, you're very interrogative. You really wanted to find the truth. You really wanted to understand the potential of this company so that you would want to invest money your own dollar, or maybe you want to invest your client's dollar. So the buy side research and sell side research are totally two different realms, and two different mindsets, two different attitudes, what you need to have if you're really looking for an opportunity as a career. The third one is the outsourced CIO. It is a chief investment officer. So for many institutions or family offices, they cannot have a group of analysts and PM to manage their money. Instead, they're outsourcing the entire function to a larger institution to manage money for that particular office, whatever their goals could be. For example, if a family office having $1 billion, their goal is essentially making 10% return without losing principal. That is their goal, and they have a long-term investment horizon. So these goals and investments are conveyed to an outsourced CIO institution, and they will be managing based on those goals. So if you're really working for an outsourced CIO, you're essentially tailoring your investment solutions for those objectives for that particular client. So it is a client by client application of the investment management research, right? So now sell side, buy side, outsourced CIO, they all need your basic skill set, all your talents, all your creativity. But the way it is delivered, the way the functions are being so separate, you need to really understand before getting into this particular career path. If this is something really suits your attitude, suits your career aspirations. And once you really like certain aspects of it, then you can really go deep into these aspects of it and become really very good at it. So that is all in investment research. When it comes to portfolio management, here you're not dealing with the individual securities, rather you're dealing with assets. So you're essentially understanding what asset classes you're going to be investing and how you're allocating asset percentages, right? So how much money you're allocating to these assets. So it is all about a portfolio, overall portfolio that could be bonds, stocks, alternatives, and whatnot. But this is definitely requires more analytical skill set to understand how do you put together a portfolio of securities to manage for certain goals. The trading these days, actually, there are not that many opportunities to trade because everything is electronic. But still, there are opportunities within the trading because still many fixed income securities like bonds, private placements, they all trade on the OTC. So they're not electronically traded. And still humans are being really exchanged codes and trades are being placed even now manually. So still there are opportunities in the trading, not as many as jobs used to be, but still trading jobs that exist. It needs a different skill set. It's all about execution. So speed versus price, right? So you have two different goals, conflicting traits, conflicting goals, and how do you really balance? And this is going to be very dynamic, very hectic, very hands-on, and it totally requires a different skill set, in my opinion. Uh, on the other hand, if someone is very good in maintaining relationships and able to connect with the people and understand their needs and able to communicate well, business development and marketing is also very good career path. People make as good as money as an analyst because here you're really helping to connect the clients to the portfolio manager, and you are the driver in really conveying that strategy. So jobs could be a product specialist, client relationship manager, business development manager. These are the roles. They pay very well, and they're highly regarded and highly, well sought out opportunities. So, so try to think beyond investment research, go into other areas where there are a lot of opportunities exist, and you're still speaking the same language and doing a lot of work on strategies because you are in the front line communicating investment strategies to the real client or the end client. The consulting is very similar to outsourced CIO, but you become an intermediary where you really understand the client needs and transfer those clients into investment objectives and create a solution based on what the institution is offering. You're truly a consultant. So, for example, Aon is a huge player in the outsourced CIO consulting services, and they need a lot of investment consultants to really talk to clients all day long. So this is all belong to the asset management. So you're still managing assets for not one individual client, but mostly the institutions. Either you're managing securities or managing institutional objectives. When it comes to wealth management, now you are in the driver's seat and you're really talking to the actual end client. And you're really trying to understand their objectives, investment horizon, and trying to create a solution by allocating assets to different asset classes, different securities, and managing their wealth, managing their wellness, managing their retirement, managing their kids' education. It all comes in the wealth management practice. So within the wealth management, it is divided into different entities. The most common entity you will find is the financial advisor or the registered investment advisor, basically RA. Some of them are independent, but some of them are actually a broker dealer network like Morgan Stanley, UBS, Wells Fargo. Then sometimes the wealth management could be just a family office, it could be endowment, could be trust, or it could be a big defined benefit plan, which they're trying to service their plan participants. It all comes under the wealth management. So there are a lot of opportunities exist in this realm, but you have to find an RIA, find a family office who are really looking for your service and able to cater their needs. So it could be you'll be doing multiple things. You'll be doing research on the securities. You'll be doing research on the portfolio allocation. You'll be preparing reports, performance reports. You will be talking to the clients, answering their calls. So you will be doing multiple functions if you're entering into this space. So be prepared that your job requires multiple skill set, and you don't have to be expert in everything, but you need to have a wide knowledge. The more the breadth is important here than the depth. In terms of risk management, it's all analytics. So the risk management could be multiple things, right? It could be enterprise risk management, looking at the firm level risk, or it could be just a portfolio risk, whether the portfolio manager is taking the right amount of risk, or the security risk, talking about individual securities. Maybe it could be risk-based investments, or maybe there is a lot of tech firms involved in developing analytics or software solutions, trying to manage the risk or understand the risk. This is one area where, particularly for your school, your school really prepares a lot of quantitative and technical skill set to really enter into risk management space. And do not neglect this space, because you'll find a lot of opportunities. There are not many schools really prepare students with the right skill set to undertake this kind of job opportunities. And then the last but the not least is the investment operations. This is a huge deal. You take any firm, it could be a wealth management firm or asset management firm, or maybe in a independent RIA. There are a lot of things goes on in the operations, like kind of trade reconciliations, counterparty collateral management, portfolio analytics, client services. So there are a lot of jobs exist in this department, and do not ignore, because these are also well paid, well sought out opportunities in the investment operations. And the last one is basically legal compliance and regulation. If you have interested in actually dual majors in law and as well as the investments, this is the right area to get into, because you have to speak both languages, legal language as well as investment language. If you understand both realms, then you are in a much bigger position to really leverage your skill set from both realms and trying to address. Every single firm need to have a compliance department, period. Compliance is a big deal, and you cannot go past compliance. If you want to present any document, if you wanted to present any agreements, everything has to go through the compliance. And the investment industry is highly regulated, and that tells you that the compliance and regulations are going to be in the picture all the time, and you need the right people, and you'll find so many opportunities in this space if you're willing to really learn both languages and really willing to go into a company where you're going to be the one calling shots in terms of what the firm can do, cannot do, and very important function. So this gives you at least overall view of the investment management industry opportunities for you. And you can thoroughly research any of or all of these areas and try to identify maybe a few areas that must be really intriguing to you and that excites you, that it matches your personality, matches your skill set. Then you can really go dig deep into these areas and they can identify opportunities. I just want to give you a structural view of a typical RIA firm, because you'll find hundreds of RIA firms throughout the country. Some of them could be as big as $300 million assets under management, as big as maybe I would say 500, maybe 300 billion to 300 to 400 billion dollars RIA firms. It's very typical for $1 or $2 billion RIA firm. They need an investment analyst to help them to develop the investment strategies, or maybe understand the products and put together portfolios for the clients. So when they get to that size, now the advisor is not able to keep up with the talking to clients. They need some help from the investment function. And that is a role you should be really looking into. So for example, let's say here, by giving an example, probably I'll walk you through different departments, how it touches. Let's say a high net worth individual client walks in, or maybe the business development manager identifies a client. The client walks in and you can give a pitch about your ideas or products. Then client says, okay, I would like to go ahead and sign the agreement with you that I'm going to move my money to manage. So that means basically your legal compliance is going to prepare the documents, and then investment objectives will be reflected, and that will be carried over to the investment strategy or portfolio development team. Someone, an analyst here, really create the portfolio based on the investment objectives and time horizon and risk, and creates a portfolio, and also set up all the asset transfers through operations. And the money is going to be, operations will be really transferring the money from the existing account to the new custodian, and the analyst is preparing all the documents. Everything goes to the trading department. The portfolio manager signs off to execute the trades. The traders will execute all the trades. And going forward, the same analyst is probably looking at the performance of the client's assets and then reporting to the client on a quarterly basis. See how many departments have touched one client. So now I oversimplified here. I think several people will be getting involved along the way. Will be client relationship managers talking to the clients, answering the questions, withdrawals, income needs, dividends passing on. Multiple things goes on, but you as a prospective candidate to identify, okay, do I want to be in the business development, talking to clients, convincing clients to invest in the strategy? Or do you want to be the one developing the strategy for this client? Or do you want to be the investment operations guy, back office, really make it happen, everything in the back office? Or do you want to really execute the trades and manage the portfolio? Or do you want to measure the performance using performance analytics, create nice reports, and send it to the client? Right? You can pick your career path based on how different departments within the RA department. Right? So these are all functional departments, and you can really identify which really suits your skill set or your personality. I want to give you some more understanding about the buy side industries, right? There are a lot of mutual fund companies exist, which are really, these are the asset managers looking for analysts. They're divided into actively managed mutual funds versus passive. ETFs, hedge funds, separately managed accounts. You can go list on and on. But I can also tell you the trend. A lot of money going away from actively managed mutual funds into passively managed index funds. That's been the trend. The fee is one of the big reasons, and also it's not much outperformance. So you can say an average asset manager is not going to outperform an index, an average. But still there are some smart managers, but an average is none. So there's also money going from mutual funds to exchange traded funds. And there are also actively managed ETFs. So robo solutions coming up, a lot of digital evolution. But what is more interesting to me, at least, is the ESG. There is a new trend. A lot of fund companies are really getting into the speed, and I try to incorporate these ESG principles into their investment philosophy and how they invest. This is definitely an area where it has a lot of potential to get into. And if you're really interested in, I would encourage you to look into this particular ESG aspect of it. So the digital evolution, a lot of indexing, and ESG. These are the big, evolutions and trends in the industry. We'll be looking for a lot of talent going forward. These are the wonderful opportunities to get into, and this is where more new opportunities going to exist than the regular traditional mutual fund PM. They already have enough analysts. They may not be actually, these analysts don't retire that early, and once they get in, they don't retire. So it is very hard to see the new openings going to, let's say, JP Morgan equity analyst. Those jobs are much harder than the same JP Morgan is really looking for someone who can help them to create ESG analytics and someone who can prepare a lot of information on the ESG, doing the ESG research. So that means there's a new function. That means new opportunities for a lot of grad students to get into. The private placement is another space. It is basically debt offering. Banks stopped issuing loans to companies after 2016. The new trend is basically, this is a GPLP structure. A lot of private companies, just like private equity funds, the private placement funds are raising capital and they're issuing loans. They're mostly senior secured loans. They need a good credit analyst to do the fundamental research on the companies before they lend the money. This year, private placements as an industry raised about $850 billion. That much money they raised from the investors, and they're going to place that investment through debt offering for so many small companies. They could be lending money anywhere from $50 to $300 million. But they rely on the fundamental credit analyst research report before they're going to issue the debt. So that means there are a lot of opportunities. These are the newly created opportunities that did not exist 5 years ago, 4 years ago. So look into that.
Dr. Pulu,
Yes.
are you open to taking a few questions?
Yes.
Okay, we have a few questions that we've received so far. One is, can you please share how useful CFA designation has been for you in your career?
That's a good answer. Very good question, actually. So I learned more about the investment industry through CFA than my MBA. CFA really helps to understand how to really being more practitioner of investment management solutions to the clients than complete abstract theory, what you learn on the corporate finance or maybe advanced instruments, financial instruments. So I and also CFA gave me the instant credibility that I'm committed to the industry and I'm knowledgeable about various aspects of the industry. Third, for many retirement plans for large institutions, they really would like to see their investment professionals have CFA designation. That is the one way for them to identify that I'm qualified to give an advice to large institutions. So based on all these things, actually CFA really helped my career a lot more than my MBA. And I would strongly advise, if you're really be committing to this industry, I would encourage you to have a CFA. I would encourage you to at least read a lot of material CFA publishes.
Thank you very much for sharing that. The second question is, what skills are essential to pursue a career in risk management?
Good. Like I mentioned about risk management here, there are several roles within the risk management. Many times, risk management, if you're going as a enterprise level risk manager or analyst, you need to have a very good quant skills. Could be Python, it could be R, it could be C++. You'll be writing a lot of code, extracting data from all over for example, from different portfolios. You'll be different security level. Maybe they have a CDX instrument, credit default swap indices. You need to understand the collateral and what the counterparty risk. You're really dealing with a lot of data. That means basically you are dealing with a lot of analytics. That means you should be really thoroughly understanding, able to do programming and able to understand the off-the-shelf softwares. Maybe they'll train you, but having that analytical mindset is what it takes to be a good risk analyst, because you're basically an investigative type mentality, that you're really looking for the problem in everything what you see, what you touch, and what you program. I think that mindset is so important. Then the skill set will obviously come, but you definitely have to be very analytical in mindset and skill set.
So I know the focus is investment management, but the last question that came in is, what skills need to work? What skills are needed to work in investment banking area?
Sure. The investment banking, even though I'm not an expert in investment banking, but I definitely have good understanding about the banking industry. The first one is basically endurance. Are you willing to work anywhere from 80 to 90, 100 hours a week? That's most important. And some of them, we may not be able to physically work that long in a week. That's definitely one, because every one you talk about as a junior analyst or an associate or analyst, they'll be working anywhere from 70 to 100 hours a week. That's number one. That's endurance. Number two, you need to have good understanding about doing fundamental research of a company, because some of the information is not publicly available, is a private placement. You need to thoroughly understand and basically kicking the tires, understand the company, their prospects, their cash flows. Because at the end of the day, you're valuing that firm either to invest money, to lend money, or try to sell that money, sell that company to someone else. That means basically you should be thoroughly, you should be very thorough in your analysis to present that company to your peers or to your portfolio manager to make that banking transaction. So A, endurance; B, attention to details. You don't need a lot of analytical skill set, just Excel is enough. But having that fundamental analysis mindset and ability to present nicely, because you'll be preparing a lot of PowerPoint presentations. You should be really good in presenting the information to the investors or to your portfolio manager. So these three skill set is probably what it takes to become getting into the investment banking and at least start your career.
Thank you. Those were the questions at this time.
Very good. All right. I think we'll get another opportunity to ask questions. So as I go along, so I think because the school is so good in preparing students for quantitative analytical jobs, I just want to give you an idea what kind of quant jobs are out there, because this is an area where you will be really seeing a lot of opportunities. This deck is going to be shared later on, so you don't need to worry about, because I'm flipping through quickly here. So the more jobs I mentioned early on, that more and more jobs are actually in the quantitative side than the fundamental side. Why? Because money is being flown from actively managed mutual funds to index funds, ETFs, or alternative strategies. They're not going to be any traditional jobs where you need to be a fundamental research analyst to get into the mutual fund industry. But doesn't mean that actually you don't need to have a fundamental skill set. You definitely need to understand how to do bottoms up research of a company, understand the company strategy, company financials, company outlook and prospects. That is fundamental, and you need to be good at it for sure. But if you really want to be a quant investor, a quant analyst, you need more. On the top of that, you need analytical skill set. That means willing to code, understand the data structures, bringing data into like time series or cross-sectional regressions, or building a model in Excel, right? Doesn't matter. It's all analytical. You have a bunch of data on securities or portfolios, mostly time series, and you're bringing that information through probably database into your statistical analysis software. Could be R, it could be Python, it could be C++. So you're bringing the data into your program and analyzing piece of data, and then trying to find some trends, try to find maybe risk, right? You're doing a lot of math, and through that you're trying to come up with some investment idea, or maybe the investment goal, right? So our strategy. But if you really look at the quant jobs, right, people will be doing regressions all day long, stats models, or simply technicals, just looking at the price momentums, or empirical models, or could be econometric models, could be risk neutral arbitrage models, risk parity models, right? Now you're becoming quant, right? You're speaking the quant language because you understand what these models mean, what different empirical, whatever it requires, right? So if you're really looking, for example, let's say regression models, that means you know how to do time series regressions, you know how to do cross-sectional regressions, you know the forecasting regressions, right? Here's the word about regressions. Talking about regressions, right? You can really do time series regression to just understand and explain the returns over time. Or it could be simply, are you doing forecasting regressions of a security or portfolio? Or you could be doing cross-sectional regressions, trying to explain the variation in the average returns across stocks, right? Or just a factor analysis. It could be anything, but you need to be very thorough about regressions. So if you're really applying for a job and a quant analyst that requires a lot of regressions, you better be good at these regressions. You know how to do programming, how to do regressions of large data. If you don't have the skill set, don't even bother to apply, because they'll be very specific. When they put an ad for quant analyst, they'll be very specific what kind of languages they're using, programming languages, what kind of data sets they have, what kind of regressions they will be doing it. And if you really match those skill set, then you're probably the right candidate for the job. Okay. So I want to give maybe another 5 minutes of aspect. How do you prepare yourself for jobs? Many times we prepare one resume and try to apply for every job we see in the Indeed or LinkedIn or any job site. That means basically we're saying that one size fits all, right? So you have one resume, one version, and you're trying to throw a huge wide net, see who will, you know, care enough to really look at resume and ask for interview. I would rather do something else. Here's what I would advise. There are things you can control. There are things you can know about your prospect employer, and you need to understand what the prospect employer is looking for, right? It's like a careermatch.com kind of opportunity here. You have an academic record you can control. There are some certifications you can do, at least you attempt to do, or maybe you can register to take a level one CFA or alternate investment certification. That means you're showing the interest that actually you wanted to fulfill and get a certificate at some point. Then you can build a lot of analytical skill set, right? And then you can also do some internships, get some experience. But most importantly, the personal traits, how you communicate that what you know. And that means how you prepare a resume to communicate to the prospect employees, right? So for example, if you're going into a fundamental analyst role, have a sample research report ready that you prepared, because they want to see how good you're writing, how good you're thinking about this problem. If you're going to business development, have something to really convey that actually how good you're communicating, how good you're good in maintaining relationships, right? So have some samples, have some information ready to convey. For example, you can send a resume, but you can also send your additional information that, hey, this is something I've done on my own. Take a look at this sample. That draws attention as opposed to be simply dropping a resume. And then try to do the due diligence know about the job, what they're really looking for. Do you have the same traits what they're looking for? Or can you something you can learn and fill the gap? And then lastly, the network. Who do you know in that company that someone can really talk to you, explain about this role, so that they'll better prepare you for this role, right? These are all things you can do, and you should be doing it. That means you should be customizing your resume for each job. Yes, that sounds like a lot. You will see probably 10 or 20 opportunities, and you don't want to be preparing 20 resumes, right? But that's not what I'm saying. It. If you see an opportunity as a quant analyst job spec, and you're really looking for as a quant analyst, see whether your resume reflects all the skills they're really looking for, at least most of the skills they're looking for. If not, if probably you have the skill set but you have not highlighted, I would say change those sections to highlight that what you're good at it, why you're good at quant analyst role. These are the skills that I have, and these are the things you're really looking for, and I have all those things, and I'll be better fit for you. So by resume, if I'm really looking as a prospect employer, when I look at resume, when I spend 30 seconds on a resume, I should know whether you're really connected to what I'm looking for or totally mismatch. If it's totally mismatched, means basically you're wasting everybody's time. You're wasting your own time, you're wasting my time. But if you really prepare well your resume and that should draw my attention within 30 seconds. Then I will be really reading deep, see what else you did. I want to know your additional hobbies other than academics, other than your professional interest. What else you do in your spare time, right? So you wanted to give me a nutshell who you are, what you're bringing to the table, whether you're right candidate to do this job I have right now, right? And then as a prospect employer, obviously, I'm looking for a talent, but I have an existing philosophy. If somebody doesn't even believe in active management, it'll be a wrong fit, because philosophically it is a wrong fit. Somebody doesn't believe in mutual funds, and I'm a mutual fund manager looking for analysts, then it's a wrong fit. You want to make sure that actually know a little bit more about the employer too, right? Understand the philosophy, understand different products they have, what kind of frameworks they're employing it, what kind of management teams they have, what kind of incentive structure, what kind of tenure and turnover. This company where many people are coming and going, see some red flags early on. And also understand the space. What is the market trend? Is this industry is going to go away in the next 10 years? Or this industry is actually in the infancy, is really going to grow big? Like example, ESG, digital evolution, direct indexing, private placement. These are the industries really a very infancy stage. They're going to really explode in the next 10 years. So you need to get some idea about the prospect employer. That means any job ad you see, spend at least 3 to 5 hours, thoroughly understand, prepare your resume, do your due diligence before sending your materials to the HR or whoever you need to send it to. Just don't take only 3 to 5 minutes and just drop your resume. Many times that won't go anywhere. But if you really spend 3 to 5 hours in from that much amount of effort, the results, you will be surprised actually the results what you can anticipate, because you really have done your homework and you really reflecting what you know, what you have, and why you are the better candidate to be hired for that role. So always think that actually in this mode, if I'm going to be the one hiring, what do I look for it in a successful candidate, right? Do a role play. If I were a potential candidate, how do I portray my case? What do I highlight to win the job? Ask these questions very deeply and write down some points. Then you will know what to do with your resume, your cover letter, your samples, your writing samples, or your research report samples, or maybe you're written a code to do certain things in your school project, and talk about that, maybe a one-page summary, what kind of quant work you have done, and why you think actually you can hit the road running within day one, right? So you can right away add value day one because you already have all the skills they need, and you can start contributing day one, right? So it all depends on how much research you do ahead of time, before you're applying for a job, or also how before you go into an interview. Many times investment management folks are very busy, they cannot spend too much time on recruitment, but the recruitment is a big aspect of it. If I get a candidate really identified all the skills and able to clearly communicate what they can bring to the table, that makes so much easier for me to make a decision. And I can also easily identify the candidates who have done their homework and the candidates who have not done their homework. That is a big difference, right? I may be making a decision in few hours, maybe with my colleagues, and if everyone is getting the same feeling about this candidate, then the decision is easier. So so responsibility falls on you, how well you prepare for an opportunity. I think we have 15 more minutes or so, so I'll be happy to take questions and answer anything you have in your mind.
There's one. Students, that I can see from your profile that you made a shift from mechanical engineering to finance investments. I have a mechanical engineering background too, and planning to make a transition to finance. So the student would like to know what your experience was like moving from engineering to finance.
Oh, very good. Actually, that's a great question. I can definitely relate to my own experiences. Um, it is it is not an easy, but it's not impossible, right? So the two things really helped me is basically I was truly passionate about investments all along in my career. That clearly reflected when I presented my case for my first job. Number one. Number two, the business school prepared me well, gave me good foundation that I can do the research, investment research, right? These are the two things. Are you really passionate about investments? And how can you really reflect your passion? For example, I created my own strategy and start managing money well before into business school. And I carried over and made significant improvements to my investment strategy, brought a lot of my MBA students into an LLC I started. And I have a now nice coherent story to tell the prospective employer, look, this is what I did, that I'm truly passionate about investments, and here's the action I did with that. Not simply taking classes, but I went beyond taking classes. I started investing money, real money, based on what I learned, based on what I developed. And also I did research on 3 or 4 companies, and I prepared the research reports. So when I went to interviews, I showed these are the research I have done on some of these companies, and here is what my takeaways from these companies. Why these are certain companies are so great buys. I have when I had to make a recommendation, there's no ambiguity, right? This is a buy companies. This is not so great companies. I wouldn't really buy at at this price at valuation, but these are great companies. So when I have this much of information with me, when I went to interview, they clearly saw me how passionate I am, how prepared I am. So then my engineering background is not really a picture at this point. Going forward, basically, I'm really prepared to do this job. That really helped me to transition, and I didn't have to look back. But later on down the career, I also noticed that actually when I had to talk to other people, having that analytical mindset, being an engineer, kind of helped me to do better job on the quant side, because those skill sets are very basic tenets. They do not go away. So when you switch to quant side of the realm, these skill sets are easily transferable from mechanical engineering or any engineering to quant jobs. So I think you can really connect the dots, and you can also make that is more appealing when you're going to for an interview or opportunity. Tell them that actually you have a lot of skill set, analytical skill set that can be carried over from engineering to investments.
So I think you might, thank you very much for that answer. I think you might have addressed this next question in the presentation, but maybe you could elaborate. If we present a portfolio of our skills, does that help?
Portfolio of skill set, essentially you're listing all what you know, right? But I think I had to go back and I had to paraphrase again what I mentioned earlier. You had to really understand what they're really looking for, right? If they're really looking for skill set, let's say 60-70% skill set you have, and some probably you don't, but these are the essential skill set they're really looking for. And then now you have a portfolio of skill set. These are all I know. You mean you have maybe 10 different skill set, but the company is looking for 5 skill set. Yes, you can give all the portfolio skills you have, but you have to really highlight and go dig deep into basically highlight this 5 skill set, how these essential skills are going to help for that opportunity, help that company to fulfill the requirement. So it's so important to really tailor, not giving a laundry list of skill set. Yes, you can provide in the resume probably far down, but the first thing they're going to look at in the first page, the first half of the page, in 30 seconds, you have to grab their attention. You have to show that you have all the essential skill set they're looking for that particular role.
Thank you. Another question, can you please elaborate on what job is going to go away in the future based on the AI, ML, tech?
Well, that is a somewhat speculative or theory, right? So I have to provide that answer based on what I see, what I've seen, the trends. A lot of assets are being flown from mutual funds, actively managed mutual funds, to index products. Let's say they're managing 15 trillion, let's say $10 trillion before a decade ago. Now they're managing only $7 trillion. That means that $3 trillion is more to either ETFs or index products. So if the whole industry is shrunk by 30%, that means 30% fewer jobs for analysts. This has been the trend for the last 10 years, and I have not seen this trend reversing. So that is an industry you want to be watchful of, going into actively managed mutual fund or asset management industry. Doesn't mean that actually that industry will disappear. Still $7 trillion being managed. They still need analysts. But the newer opportunities may be fewer than wider. So that is one area I would be very careful about. Otherwise, there are so many industries coming through now using AI, using big data analytics. These jobs will continue to grow, in my opinion. And the investment management industry is so big, It won't. None of these realms are going to disappear overnight. It'll take several decades to probably slowly deplete. But you as a candidate, for you, it's more important. Yes, which industry is growing, which industry is really hiring now. In this industry I want to get into because the future is going to be, so that many opportunities to grow. Because you want to go into a place where the industry itself is growing, the pie is growing, so you have an opportunity for develop your own career and grow your career. But I would just be a little more watchful about actively managed mutual funds. I'm not discouraging you, but that is an industry, it's much more challenging, I would say, to grow. It probably takes some time to really grow from an analyst to portfolio manager, probably 15, 17 years, I guess.
Okay, it looks like we have 2 questions remaining. Are there any tools that you can suggest for one to sharpen their analytical skills?
I think as a basic, you need to have two skills. One is basically able to access data from databases. Most likely you will be encountering SQL database. So as a minimum, you should know how to write SQL queries to bring time series or lots of securities data into your statistical software program. So you don't need to be expert in the SQL, but make sure that at least you know how to write SQL queries. And then the SAS, it could be anything. It could be Python, it could be R, it could be C++. A lot of prop trading firms in Chicago realm, they use C++. And I see more of late Python is a preferred programming language to write code, to do analysis, or to develop a strategy. R is also equally good, but once you know R, Python, you can pretty much learn very quickly and develop the skill. But make sure that you have multiple skills of this hard quant skills, because every company is different. If somebody is writing code everything in C++, they're not going to hire somebody with Python. You need to be very good at C++ because they don't have time to teach you a new language. You should be anywhere from I would say not advanced beginners. You should be at least advanced skill set, not at a beginner level. Maybe advanced beginner, intermediate to advanced. Then you can feel yourself that actually you have that skill. If you are just a beginner, I wouldn't put in the resume because they assume that actually you are very good at it. And once you get a job and you don't know how to do it, there'll be a mismatch. Be honest. If you know C++ only basic level, don't put in the resume that I know C++. They expect you to have a big code writing day one. Okay.
Fantastic, thank you. So we have one last question before Shazad closes us out. Why, and you touched upon this, but maybe you can elaborate, but why ESG, why is ESG based investment becoming more important?
Sure. Yeah, I think as a good observation. Basically, I touched upon ESG several times. So there are two big themes going on in the industry. One is the DEI, diversity, equity, inclusiveness. This is going on for at a corporate level for all the shareholders and the stakeholders. And then in the investment realm, similar or parallel to DEI, ESG. Why? Because the new generation of investors are very demanding actually, and they also have clearly expressing their preferences. For example, a client would be asking, you know what, I would like to invest my retirement money, but I don't want to invest in companies that produce guns or maybe cannabis. So that means basically exclusivity, right? So that means they're excluding those investment opportunities for their money. That means you as an investment manager or analyst, you need to identify opportunities that are meeting the client's requirement. Maybe somebody is really so passionate about environment and they don't want their money to be invested in carbon polluting companies or pollution in general. That means you need to exclude those investments. How do you identify, right? Governance is a big realm, and you need to understand the corporate governance and what they're really doing to the shareholders and stakeholders. So this is an industry is evolving so fast that means everybody needs to adapt to ESG trends. Every investment strategy need to really comply with ESG or ESG ready, because the clients are changing, the demands are varying, and the industry is trying to catch up with it, embracing it. When they try to embrace, the existing technologies or personnel are not really prepared to embrace it. They need new talent. They need a talent who understand this concept thoroughly. They want someone who can get on to the day one, help them to really retool their products to be ESG ready, so that you can start giving those solutions to the clients. Maybe now and going forward. Now only 10% of clients are asking for ESG mandates. Many institutions are already started asking for ESG mandates, but maybe 10 years from now, 70% of the client base really are demanding ESG mandate driven investment themes. And that's why actually this industry is so promising, and there's a lot of opportunities for many of you to be in this space. But do your research, do your homework, understand thoroughly what these ESG principles are. There's so much literature available in the web. You can self-learn and be prepared for that. And there's a lot of analytics too, a lot of data involved in it, and there's a lot of analytics behind it, because you want the quick answers, and how do you quantify this highly qualitative nature concepts. Okay.
Awesome, awesome. Thank you so much once again, Dr. Poola. I think this has been a very, very helpful session. I'm sure our students really enjoyed listening to you and learning from your knowledge and experience. Thank you once again, all the participants. We will be sharing with you a link for providing us feedback. Please feel free to provide us your feedback. We also have another session coming up tomorrow. Please take a look at Handshake and sign up so that you are able to participate in that session as well. With that said, I would like to once again thank all the participants and Dr. Poola for your valuable time, and we look forward to keeping in touch with you.
You're very welcome, and good luck to all of you. Wish you all the best.
Thank you.
Thank you.